morning. So January 30th, today's setup came from a higher time frame setup stemming from the 4 hour. So I have NASDAQ here on the right, and you can see how price actually dropped into this 4 hour imbalance, taking out the London session low around 5:15. Price did shoot back up and we overshot the gap a little bit around 7:15, but after that price started to push back up, and this is where I really started to watch price. I don't trade before market open. So while I was watching this around 9 o'clock, I noticed how price pushed up past this 1 hour fair value swing high. But if you look over on the left on S&P, we actually entered a sell side imbalance right here. So this was the moment where price needed to show me who was actually in control. Was it this 15-minute sell side imbalance, or was it the bullish 4 hour imbalance on NASDAQ? So I wasn't sure yet who was in control. So what I was looking for was to see which one of these would fail. And the fastest one that would fail first would be the 15 minutes, simply because it's a lower time frame gap, right? The lower the time frame of the fair value gap, the sooner you'll see whether it holds or fails. Now, if this sell side imbalance was to hold, then the external liquidity that price would go after is down here at 6,074 and a quarter for the S&P. But if the 4 hour was to hold over here on the right, then external liquidity was much higher, above London session highs. So the way I watched for the failure for the 15-minute was taking a look at how the first candle gave us a bearish reaction out of this imbalance, right? But if I go to the very next candle, this candle went below, a little lower than previous candle's low, but it also went back into the 15-minute gap. From here, I dropped down to the 5-minute to get a better look at what was happening, and this is what I saw on the 5-minute. I noticed we had these equal highs on S&P, but we had a little bit of divergence on NASDAQ. So this was the first thing that kind of stopped me from just jumping into a buy. I don't like to buy into divergence. Usually divergence at the highs means that price is going to drop a little bit. So instead of jumping into a buy here, I wanted to wait a little bit more before seeing if this gap can still fail. So the first thing I saw on this push up was how price overshot this 5-minute area right here. This little bitty gap right here, price just went right through it as if it wasn't even there. So I dropped one more time frame down to see if there was an imbalance in this area here that I could look for a buy from. So dropping down to the 2-minute. So here on the 2-minute, you can see what that 5-minute price action looks like. The first thing I was looking for was to see if we could get a 2-minute gap to hold. And what I mean by that is I wanted to see price drop back into one of these fair value gaps, either this one or this one, and actually see it go higher and hit external liquidity, which is up here at around 6,093 on the ES chart. What that would allow me to do would find a new entry and put my stop below wherever that swing low was. So this is how that looked. If I hit play, you'll see how price drops, exceeds the first one, enters the second fair value gap here, and I'll draw that out. From here, what I'm looking for is to see this gap hold, and I want to see a candle closure above this candle's body right here. From there, I'd be looking for an entry long with my stop loss below this first candle's low. So if I hit play, right here, when I got that massive closure beyond this candle's body, I actually put my entry right here, and my stop was below this candle's low right here, and I'll make it red. Now looking at this is a large stop, but I didn't know how far price could drop back, so I wasn't going to take any chances. I decided to just go underneath this low. I could have went under the swing low itself, but I was just trying to reduce a little bit of risk where I could and still consider myself somewhat safe. But now if you look at the chart on the right, you can see I also have some divergence with this trade. So the 924 candle on NASDAQ is looking down at the 934 candle. And on S&P, the 924 candle is looking up at the 934 candle. So there's my divergence, and I have my entry, and I targeted 2R. So zooming out here a little bit, you can see how 2R takes me above London session high, but not quite to previous day's high. And I was completely fine with that. But if I hit play, you can see how that played out. Price drops into the 2-minute fair value gap, continues higher, hits my target. And if I just jump out to the 5-minute and make these charts even again, you can also see how the NASDAQ chart took out London session high. And because we were so close to previous day's high, I assumed we would get up there. I was already out of my trade, but I assumed we would get up to previous day's high. But we actually ended up reversing really hard after taking out London session. And I'll just show you what that looks like. Okay, and this is where we are currently at the time of this video, heading back below those London session lows, but I was already out of my trade here with 2R. So that was my trade for today, and here is that recording.